Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, April 15th, that's tax day 2008. Well, as we get into today's video, I really want to focus in on a couple factors that have been going on in the market. Number one, I want to look at the charts and the patterns that are forming. And you guys know we're a big believer in three main technical indicators: pattern, price, and time. If you can learn how to read those, you can learn to read any chart. It doesn't matter if it's a stock chart, an index, commodity, you name it, you can read it if you can understand how to read those key factors. Again, pattern, price, and time. We're also going to touch on the psychological nature of this market and how important that is. You guys know we've been discussing that quite a bit lately and how important it is. Reading the put-call ratios gives you a good idea. Also, just watching the media or watching a group of individuals. If you can get a group of individuals together that aren't necessarily pros or anything, or even if they are, and gauge their overall sentiment of the market. Do most of them agree that the market's going down? Do most of them agree the market's going up? What you do there, and it's strange enough, whether they're professionals or not, is you gauge whether or not they're bullish or bearish. Now, once you gauge that, you go the opposite way. And I would say more often than not, you will be correct by going the opposite way. And it goes counterintuitive. You know, normally you'd say, well, if these guys are professionals, if these are brokers, if these are, analysts, and they're all saying this, well, shouldn't I go with them? Well, not always, guys, not always. And I think we can all see that, and we've proven that over and over again at InTheMoneyStocks.com by going against the trend, against the overall sentiment out in the market, and being right most times. I would say a high percentage shot at mostly right if not all the time. Now, what I want to do here, folks, is go into the intraday charts, and let's just discuss this as we get into this. Number one, the intraday move today, not a whole lot going on out there, to be honest. We really saw the markets just trend slightly to the upside, and again, we're still watching to see if that inverse head and shoulder pattern is going to form on the daily chart, and we'll look at that when we look at the daily chart again. But that's what we're anticipating here, and then we'll show you the neck break line that would trigger a major run-up in this market. But nonetheless, you saw today's action being up and down. It was really choppy, but it wasn't choppy in a big way. They were small moves, but just consistently, connected to a multiple candle formation on one way or the other. And I want to show you what's going on here. You basically had the market right here around 7 o'clock begin to uptick. And that basically continued all the way until about 9 o'clock, at which point we started to sell for a couple hours. Then you started to rally for a couple hours. Then towards the end of the day, you got a small pullback into the moving average and a push up. Now, the little thing I want to just show you here is you had a small pattern formation. It's almost hard to see, but you had a little head and shoulder pattern here. And you guys can see that you had a little continuation on the downside there, really forming at the double bottom. Now, the one thing I want to show you about this is that the market did break that double bottom a little bit, but we always talk about how important double tops and double bottoms are. Oftentimes you see them flush a little bit below to scare the amateurs or get the amateurs on short or long. So in this case, for instance, once this bar is down here, a lot of amateurs say, oh, this is a good short now, it looks like we're going lower. No, not really. What this is just a fake out of the market taking that psychological negativity right here, turning it into a bull push. All right, so you have a nice push up in that manner. So really, at this point, when you're at the lows from a high point up here, we personally at InTheMoneyStocks.com, we're never looking to go short until we see a push up first. All right, and what do I mean by that? Well, you have to see, this market used to be up here. I could have bought it or shorted it at this price up here. Why would I be shorting it here? You always have to look at the market or a stock as where it's been and where are you now and which position you're going to take. I don't go to the store and say, well, milk only cost me 50 cents here. Now it costs me $3. I think I'm going to buy it now because it really looks good because it cost me $3. No, what you say is, you know what? I'm going to wait for that milk to pull back. In this case, it's a push up. And then I'll buy it when it's cheaper again. And that's the same thing goes for that. It could be any commodity. It could be anything in the store that you look at, whether it's a baseball card or whatever. You wait for the price to come back, and then you jump on board. And that's common sense. But in any case, you can see the little bit of a head and shoulder pattern here. And I want to just show you guys that. It's not a great one, but nonetheless, there's a little shoulder, head, shoulder, break down to a double bottom break, at which point there's a trigger of too many bears going on board on the break. You cause the rally right here, which pushes it up nicely to about the 2 o'clock time frame, at which point you pull back into a multiple moving average area. Notice the 50, the 200, and the 20 all in this area, and at that point we rally into the close. The market's closing up nicely on the day here. Again, as I mentioned, the markets were all positive. Net Dow was up 60 points, the NASDAQ 10, and the S&P about 6 points. This is all about 0.5%. It's nothing major. Really it's just another consolidation day. The one thing we've been talking about lately is, though, how we're hoping we're making a bottom on this chart. And I want to flip to the daily chart to get this in. All right, so let's go to the daily SPY. You guys know that we're anticipating a possible head and shoulder pattern right here. It's an inverse, excuse me. Inverse is bullish. All right, inverse is bullish. And here's the next shoulder forming. So really what we want to see here is you need to see a better move up here now, creating that other shoulder, or sideways. We really don't want to see this market pull back much more from this point. You really want to see a sideways pattern now, especially getting above this necktie on the daily chart. Let me erase some of these lines so we can show that necktie. So if we're going to form this other shoulder here, then you look for the break point of the neckline, which is right here. Once we break above that, it is our anticipation that we're going to probably see this level here before the next hard sell in the markets. But in any case, what you are seeing again is the shoulder over here forming. And as I said, it's important that we stop going down. You really see, you filled the gap here, and this is the key here, guys, is that notice the gap fill in this area right here. This was a gap in the SPY, and you filled the gap in the last 2 days. That's important because that's new support. So this is a support line. We filled that gap. Now we're going to see if we can push this market back up, forming that other side of the shoulder pattern, possibly getting back above this necktie. Notice the yellow line here is the 20 moving average. I hope you all can see the 50 moving average, which is right here. I'll draw that in. So here's the 50 and the 20. I'm drawing them over the lines. Now, if we can get back above that necktie and establish ourselves, that bodes very well for a continued move up. Now, as we always say, anything can happen in this market. It could go up, you could go down. It's really, especially in Options X week, it's going to be wild, and we all know that, right? InTheMoneyStocks.com preaches being careful on Options X week because Whipsaw Wednesday is tomorrow. Our coin term for the Wednesday prior to Options X was Whipsaw Wednesday, and it is always a wild day with wild big moves. It's very rarely a dull day, and we are coming into that tomorrow. Now, on the daily, continue to watch for this pattern to possibly form. Now, the one thing that leads us to believe, and again, you guys know we've been pushing for this, the charts have been telling us, I should say, that there's a rally on the horizon again. We just had to get enough people on board on the short side and the charts to set up properly, and it looks to be that. And now many of you guys might say, well, we moved below that necktie on this chart, right? So why is that still bullish? Well, you're still looking at a bullish chart pattern. Remember I mentioned yesterday you had a Fibonacci level right here, a possible retrace, right around here, and this is not exact, but right around here is a 50% retracement, so we're right about that 50% line retracement on the indexes, and that's a Fibonacci, that's the most common Fibonacci retracement. In addition, you know that the market in general is not going to come right to that necktie and then blast higher. Again, neckties being a solid support line of two moving averages crossing, and you might say, well, why wouldn't that just blast off? Well, it's too easy. If it always did that, if it didn't flush and make the amateurs scared and kind of get everyone nervous, then everyone's long and everyone's going to make money. And what happens when everyone's long? Well, guess what? The market doesn't go that way. So I just want to be clear on that, is that it's so psychologically based that you have to expect that it's going to fluctuate around this area. The important thing is eventually we get back above. Hopefully we keep enough bears on the table and we can move up and start breaking this market higher. We'll have to keep a close eye on the chart patterns. And remember, this is key, guys, is today we may be saying rally or possible rally setting up, but it's important to understand that chart patterns will change every day. Every day we get a new piece of this puzzle, and we will have to, it's very possible that we have an ugly candle formation here or there, and we'll say, guys, this looks like a near-term sell, or vice versa. So just keep that in mind, and that's why we always preach caution and always maintain a stop. I don't care who you are. If you're Warren Buffett uses stops. We use stops. Everyone uses stops. You got to use them. Okay? Now, the one thing that's nice about after hours today, guys, I mentioned yesterday some key data coming out. Number one was PPI this morning, Producer Price Index. By the way, food and energy are unbelievable. You guys know what's going on across the world if you follow the news. There's like rioting in multiple countries. I think inflation in food in the U.S. is just ridiculous. You strip it out, then inflation's not bad, and the market didn't seem to mind that data when you looked at the core. But in any case, the other thing I want to bring up, we mentioned yesterday, you had the PPI this morning, and Intel earnings after the bell. Intel is going to be big, guys. You know tech, that's a tech bellwether, going to be big. Intel came out, did much better than the Wall Street had anticipated, and I will show you the level 2 here as it trades. Intel closed up 22 cents on the day at $20.91. Right now trading at $22.41. Now this could change by tomorrow, but it's been holding this up nicely level, so you got to figure that it's going to be a bullish push. The markets probably will, especially technology, will probably yield a positive move off this tomorrow. at least up until, the futures will probably be up until the CPI number tomorrow. CPI is coming out at 8:30 tomorrow a.m. New York time, East Coast time, and you also have JP Morgan Chase releasing earnings at 7 a.m. Now, if those both come in tame, if the CPI number comes in tame, as well as JP Morgan Chase comes in line or better, this market will continue to push tomorrow. Either way, tech looks to be strong tomorrow. Whether or not the financials do well tomorrow is up in the air based off JP Morgan and my belief. So we'll have to continue to watch that, guys. Just tons of stuff going on. Tomorrow after the bell, eBay, watch for eBay, as well as there's some multiple other earnings tomorrow. IBM is going to be huge. Then on Thursday, you have Google. It's going to be a wild whipsaw Wednesday tomorrow, I'm sure. Come on, join the chat room. Get on board here, guys. You're going to learn this stuff. It's important for you to learn for your investing careers. Have a wonderful day. Join the swing trade alerts, the options alerts, private consulting, institutional consulting. Have a wonderful day. We'll talk to you tomorrow. Take care.